Have you ever wondered how your money could work for you while you sleep? Well, that's the magic of investing. Investing isn't just about stashing your money in stocks, real estate, or mutual funds. It's a strategic decision, a conscious choice to allocate your resources today to secure a better tomorrow. Imagine your funds, tirelessly working, growing, multiplying, even when you're not watching. This is how investing helps you beat inflation, build wealth, and achieve long-term financial goals. It's like planting a seed today and watching it grow into a mighty tree over time. It's about nurturing your resources, giving them the right environment to thrive. It's not just about the money, it's about the future you envision for yourself. It's about financial security, prosperity, and the freedom to live life on your own terms. Investing is giving your money a job, a mission to grow and multiply. In the world of investing, compounding is your best friend. It's the secret sauce that can turn your modest savings into a substantial fortune. But what exactly is compounding? Let's dive into it. Picture a snowball rolling down a hill. As it rolls, it collects more snow, growing larger with each turn. That's the essence of compounding. When you invest, you earn returns on your initial investment. But the magic of compounding doesn't stop there. You also earn returns on the earnings you've accumulated from previous periods. This creates a powerful snowball effect where your wealth grows faster and faster as time goes on. Let's illustrate this with a simple example. Suppose you invest $1,000 at an annual interest rate of 5%. After 1 year, your investment grows to $1,050. That's your initial investment plus 5%. Now in the second year, you don't just earn interest on your initial $1,000, you earn interest on the full $1,050. And this cycle continues year after year, growing your wealth exponentially. This is why starting early is crucial in investing. The more time you give your investments to compound, the more wealth you can accumulate. Think of it as planting a tree. The earlier you sow the seed, the more time it has to grow, and the more fruits it will bear in the future. So, starting early is not just about investing more money, it's about giving your money more time to work its magic. But remember, compounding is not a get-rich-quick method. It's a slow and steady process that requires patience and discipline. It's about letting your money work for you over the long term. It's about understanding that the most significant returns come from waiting, from allowing your investments to grow and compound over time. Remember, compounding is a marathon, not a sprint. The earlier you start, the more wealth you can accumulate. So, start today, and let the power of compounding help you build a prosperous financial future. While compounding is the engine of wealth creation, diversification is the safety net that cushions your investments. Now you might be wondering, what is diversification and why is it so important? Well, picture this. You're at a buffet, and there's an array of dishes in front of you. You wouldn't just pile your plate with one kind of food, would you? No, you'd take a bit of this, a bit of that, trying to get a balanced meal. That's essentially what diversification is, but with your investments. Diversification is the practice of spreading your investments across a variety of assets such as stocks, bonds, real estate, and more. This strategy helps manage risk. Think about it. If all your money is tied up in one company's stock and that company goes belly up, you lose everything. But if your money is spread across several companies, industries, or types of investments, the performance of one won't drastically affect your overall portfolio. It's like putting your eggs in different baskets. If one basket drops, you won't lose all your eggs. This is where diversification shines as a strategy. It doesn't just protect against potential losses, it can also balance the overall performance of your portfolio. While one investment may underperform, others might excel, providing a balancing effect. But remember, diversification isn't about putting your money into random investments and hoping for the best. It's a carefully considered approach that takes into account the potential risks and returns of different assets. It's about creating a balanced portfolio that aligns with your financial goals and risk tolerance. Diversification doesn't guarantee profits or protect against all losses, but it's a proven strategy that can help manage risk and potentially enhance returns in the long run. It's like a safety net, cushioning your investments against market shocks. Diversification is not about making quick gains, it's about minimizing risk and securing your financial future. So the next time you're thinking about investing, remember the buffet. Don't just pile your plate with one kind of investment, spread it out, balance it, and let diversification work its magic. Investing isn't a one-size-fits-all endeavor, it's a journey tailored to your own financial goals, risk tolerance, and time horizon. Now let's dive into these three key considerations. Firstly, your financial goals. Are you saving for retirement, your child's education, or maybe a dream house? Your goals will guide your investment choices. For instance, long-term goals might warrant a more aggressive strategy with higher risk, higher return investments. Next, risk tolerance. This is your ability to endure potential losses. If the idea of losing money keeps you up at night, you might lean towards safer, lower return investments. Lastly, your investment timeline. The more time you have, the more potential there is to recover from market downturns. This could allow for riskier investments earlier on. Remember, the perfect investment strategy doesn't exist. It's a constant work in progress, much like a bespoke suit, always being adjusted to fit your evolving needs. Your investment strategy should be as unique as you are, shaped by your goals, risk appetite, and timeline. Let's quickly recap what we've learned about the power of investing. We began by unveiling the magic of investing, which is really about setting resources aside today to secure a more prosperous tomorrow. It's about your money working for you, even when you're not, helping you beat inflation, accumulate wealth, and reach your long-term financial goals. Then, we delved into the power of compounding, the snowball effect that turns modest investments into substantial wealth over time. We also explored the strategy of diversification, a risk management approach that involves spreading investments across multiple assets. Finally, we underscored the importance of tailoring your investment strategy. This means aligning your investments with your risk tolerance, financial goals, and time horizon, ensuring that your strategy suits your unique needs. Investing isn't a get-rich-quick scheme. It's a disciplined and patient approach to building wealth over time. Start early, stay informed, diversify wisely, and watch your financial landscape transform.